Hi everyone, welcome to this week's edition of This Week in Global Development. My name is Jumbi and I'll be your host for this week. And I am joined by my colleagues Adva and Elissa, who are not new to the podcast. But we also have a guest this week. We have Clemens Lenders, who is the Vice President of the Center for Global Development, joining us. Welcome, Clemens.
Thank you for having me.
Thank you for joining us. It's been quite a while since we've had a guest, so it's quite a treat to have you. But to start off with, I want to dig into a story that we published early this week. Elissa, you've been working on the story for quite a while. We published a story which looked into what lay behind the deaths of 7 World Central Kitchen aid workers in Gaza. Elissa, can you take us a little bit through your findings for the story?
Definitely. So the story kind of evolved over several months. I first started looking into this issue in August, believe it or not. So it's been 8 months since I was first approached by a former staffer that had concerns about kind of years of what they referred to as safety lapses across the organization that they had also experienced. So these are things like not having training before going into places like Haiti, not going to Ukraine and not having emergency contacts on file and this types of things. So kind of throughout the process of their time at the organization, they had seen many things that made them feel uncomfortable. Ultimately, I talked to almost 15 people about what they had experienced working at the organization and what they felt might have contributed to the events of last April, which is when 7 World Central Kitchen staffers died in Gaza. Obviously, it was a really complicated story to report. This is something that is an issue across many aid agencies. Are staff trained? Do staff have the proper safety and security protocols to go into, especially in Gaza's case, the most dangerous place for aid workers in the world? And what we found is that a lot of folks were really worried that this would happen and kind of bracing themselves for this eventuality. So I think it was 10 or 11 people that told me exactly, it wasn't if someone was going to die, but when. We kind of all knew that this was going to happen at a certain point. So that's kind of the thrust of the story. And it really looks at kind of, again, the April 1st incident that happened last year, the attack, and then also the last couple years of safety and security lapses.
And I know right after there was an investigation that was commissioned by the Australian government, and it sort of detailed some of these safety lapses. Can you take us through what the report actually said?
Yeah. So to be clear, the report puts Israel at the forefront of the blame. So it says, it was a mistake. It was a mistake in identification. And at the end of the day, the IDF, the Israeli Defense Forces, took the blame for this and called it a quote grave mistake. So I think that's important to lay out at the forefront. But the report also did have another more complicated set of facts, which was that folks were traveling at night, something that in internal messages I saw was not allowed. They had kind of said we will not be traveling at night because it is a very heavily active war zone. There was a locally contracted security person who fired a weapon off of the roof of one of the cars associated with the convoy. So that was another thing that just kind of trained the IDF's eyes toward this convoy, even though they had already known that it was going to happen and that this work was going to be set out. But that weapon kind of going off and that gun going off was another thing that the Binskin report, which is the name of the author, pointed out. There were also issues with the rooftop branding. So because they were traveling at night, it was unclear whether that could actually be seen in the dark. And overall, it was just kind of a number of different failures that ultimately led to this very tragic incident that 7 people lost their lives.
And one of the things the story sort of brought up for me is difficult questions in how to deliver aid, because I think one thing that WCK prioritized or sort of put in the forefront is how fast they're able to deliver aid, which is an important thing. But then also if it's like, if there are safety risk concerns, it's also how do you balance those things? And I think right now, as people are reimagining how to deliver aid and how to do less with more, that's also going to be like a little bit of a juggling thing that they have to do. But what did you sort of discover about WCK in terms of like how the company was built and sort of their ethos?
Yeah. I mean, I think you've hit the nail on the head, Rumbi, which is this is something that WCK is known for, right? Like getting to a crisis before anyone else, getting there immediately, kind of no strings attached. We'll do whatever we can. I think, if you look at the promotional videos for the organization, it's Jose Andres, their celebrity chef founder, kind of jetting into the scene of a crisis in a boat. And it's like, all guns blazing, kind of getting to the crisis. without any regard, just kind of making sure that they get to people who need it. And that's important. And that work is sometimes slowed down by the bureaucracy of, say, getting permission to enter a place or working with, the UN, whether it be the security cluster or whatever that might be. So this is something that I think a lot of humanitarian aid workers know and can feel that slowness that might inhibit response. But I think what the staff told me was that if that's not done right and if that's done too fast, then that's really dangerous and that makes people feel unsafe. And I think it's also a level of, World Central Kitchen, at least in the earlier days, we're talking not that early, but, for folks as recent as 2021, 2022, 2023, the model is food, right? It's focused on food. So I spoke to several people who were involved in catering and who were chefs, and they had either lost their jobs or they were looking for something different. And they were just like, you know what? This looks like a cool organization, celebrity chef. I'm going to give it a go. And one of the women that I spoke with was, again, a culinary, she was a professional chef. She was trained in culinary expertise. And she ended up pretty quickly just going to Haiti with no training and just kind of because they needed someone immediately. And she couldn't find anyone who felt comfortable doing it because of there was a lack of protocols. So she was like, all right, I'll just go myself. And this is a single woman with, a chef and culinary background with no training. So that's kind of the push and pull, is like getting there as quickly as you can and getting to people that need it, especially in the case of Gaza where there's so much need. But are the people set up for success? Are they going there in a way that will be helpful for the people, but also to keep themselves and their team safe?
And I also think expertise is like really important in this, like who's making the decisions, who's in charge of security. And I think this will probably come up really like in this moment in time when a lot of people in the aid sector are actually losing their job and we're losing a lot of this expertise. So I think expertise is also really important. But I also wanted to ask, before we move on, since then, what has the organization done in terms of like their safety protocols?
Since April 1st, you mean? I think that folks that I've spoken to that are still there have said they've seen some push forward. There was in May, so this is 1 month after the attack, they've hosted their first heat training, which is an intensive course. Now, for a lot of folks that I talked to, there's a lot of sadness around that. Why was it 1 month after the deaths that this was the first time that the organization had a heat training before they sent people into conflict zones? But they did host it. So that was in May. Today, World Central Kitchen told me that there's 130 people that either have gone through that training or will go through that training. So I guess that's the bucket of folks that are either, again, will or have gone through that heat training. They also are hiring for a couple of folks I noticed on their website that are for security. So I think, it's now up to the organization to see how they do bolster security, how they said that it is in the statements to us that it is really important to them, that it is a top line, and how their staff will feel going forward.
And I'm going to switch gears a little bit here because next week we will be at the World Bank Spring meetings. My colleague Advar, along with Jesse, will be attending the meetings, and Clemens, you'll also be there. So first of all, I think maybe the most important questions is what should we be on the lookout for? What are sort of the key themes for this year's meetings?
And IMF spring and annual meetings are generally big rendezvous point for global econ and global development. Finance ministers and central bankers throughout the world come and discuss the world's big problems and try to solve them. And it's a big moment generally for multilateralism and global cooperation. Obviously, the world is in dire straits right now. There's a real crisis of multilateralism. A lot of it is originating here in the United States. And I expect, the mood at these meetings to really, really reflect a lot of the disorder we're seeing internationally and a lot of the chaos, frankly, that's been originated here in the United States and that's having profound ramifications for countries, rich and poor, throughout the world. If you look at the official agenda for the institutions, it's very light. We can talk a little bit more about that later, but there's not a big policy agenda that's being put forward. And I think the World Bank and IMF are deliberately trying to lay a little low. And why is that? And this links to really what I'm going to be watching very closely, which is the U.S. posture this week. I think there are really big questions that loom large around the U.S. participation in these institutions, both the World Bank and the IMF, and other multilateral development banks. And I think the first question is sort of an existential one, of will the U.S. continue to participate in these institutions? There's been a lot of noise around the U.S. potentially even making steps to withdraw from these institutions. We've seen the United States, via the State Department, pull out of some of the UN organizations. If anyone who's read Project 2025 knows that there is a strong current within Trump's party that thinks that withdrawing from the IMF and the World Bank would be a good thing. I do not think that is currently a resolved debate within the administration, and I think there are many people in the current administration that do not think that withdrawing is in the U.S. interest. But beyond just withdrawing, I think there's a second question that's also really essential is, will the U.S. continue to participate financially in these organizations? And in particular, there's the International Development Association, which is one of the largest parts of the World Bank, which provides very inexpensive loans and grants to the world's poorest countries. And that needs to be replenished every 3 years by funders because it provides below market loans. At the end of 2024, the Biden administration pledged a very $4 billion to the International Development Association, which concluded a $100 billion replenishment. But that pledge is currently TBD. There's not yet a sense of whether the Trump administration will honor that pledge, and that could have very, very significant ramifications for the world's poorest countries because IDA is really the largest source of external financing for most of the poorest countries in the world. So that's the second question. Will the U.S. continue to fund these institutions? And the third question, and I think this is where we may have a little bit more tangible evidence this week, is sort of what is the price of U.S. participation? Because if the U.S. is going to remain engaged, they're certainly going to ask for a lot in exchange for that, if the U.S. is going to remain financially engaged as well. And so what is the reform agenda? One of the things that we've been hearing a lot, and we can talk more about that later, is, interest around the institutions funding different kinds of energy, including nuclear, which has come up a lot. But I would expect there's a much longer list of reforms, and I think that will become evident potentially over the course of this week. I mean, this is, it is the case that the administration has really shown its cards in a lot of ways on the bilateral side. I think the lightning dismantling of USAID in barely a month, has really sent shockwaves through the system. It really hasn't shown its cards yet on the IFI side, on the international financial institution side. So that is going to be what I'm going to be watched for most closely. I don't expect we'll have all the answers this week, but we may have some elements that start to transpire.
I'm actually not sure what's better. Do we want the administration to show their cards? Because I think a lot of people are saying it's unlikely that they would withdraw from the World Bank and the IMF. But everything that's happened this year, we would have said was unlikely last year. And I know Ajay Banga had a press conference yesterday and he talked about some of these things. He talked about IDA. He also says he's not sure where we stand with US funding. He also talked about the bank's commitment to climate, which I think might be part of the conversation with the US. And he also spoke about this focus on jobs. Can you take us through some of the things that he said yesterday?
Yeah, and I think, totally agree with everything Clemence said. And I think that I think one of the things that stands out is that, as you said, there are people in this administration who seem to believe in the role of multilateralism, in the role of the U.S. staying in these institutions, and people within the Republican Party who feel that way. But it's very unclear about who is ultimately going to make these decisions. And I think one thing to note is that one of the reasons that the World Bank and the IMF might be keeping kind of quiet is that they are in this period of 180-day review where the U.S. is reviewing their role in these institutions. And so I think that there haven't been a lot of decisions internally. That was a review spearheaded by the State Department. I do understand that Treasury is now involved, especially on the MDB side, because that is managed by Treasury. But I think we don't have the answers, and at least most people don't think we'll have the answers necessarily next week. We don't have leadership at Treasury who oversees these issues in place yet. There's no World Bank executive director nominee, things like that. But it's there, as she said, it's very up in the air. And maybe the administration could decide, okay, these meetings are happening. We want to say something. In terms of what Ajay Banga, the World Bank president, said yesterday, he really talked about the core focus of these meetings, which is on jobs. And that is something that he has sort of laid the groundwork for in the past. And at the end of the annual meetings in October, in his sort of closing speech, he talked about, he had spent a lot of his time to that point trying to make the institution better, trying to speed up processes. And to that end, I think the goal by June is to have projects approved within 12 months. It's already been, at least 25% faster than it was in the past. So we spent a lot of time on sort of that plumbing of the institution. But at the end of the annual meetings, he really talked about how the bank needs to be focused on jobs. And so yesterday he talked about sort of laying out the problem, which is that the forecast shows that there will be about 420 million new jobs, but 1.2 billion young people entering the workforce over the next decade. And that is both an economic issue and a global risk. And so that is really what the bank will orient itself around. And I'm working on sort of a feature talking to folks at the bank about how they define that and how they're going around that. So stay tuned for that next week, because I think, he talked about the need for tangible outcomes. One of the things that's interesting is right now on the new revamped World Bank scorecard, the only place we have no data is on jobs. And so that is sort of interesting to note at this stage. They told me they're working on that and those should be out soon, but having a baseline so we can understand sort of what the goals are. But I think a part of that jobs agenda is also doubling down on sort of the role of the private sector in economies and in sort of the way the World Bank thinks about things. This is sort of a natural fit for Ajay Banga, who comes from the private sector himself. He helped launch this private sector innovation lab, which was originally about 15 CEOs focused on, some key investment barriers, including regulatory uncertainty, political risk, foreign currency risk, a lack of junior equity, and a need for securitization. So they've been focused on those things. But he talked about sort of a 2.0 of the private sector innovation lab being a move from sort of testing to implementation across bank operations. So, expanding a focus also on sectors that are important for job creation and expanding the private sector innovation lab itself. So it will look at energy, infrastructure, agribusiness, healthcare, tourism, and manufacturing. And to that end, he listed some things that the bank has already done, including increasing its political risk insurance through MIGA, its guarantee arm, by 30%. And that puts them on track to triple their offerings by 2030, which is the goal. And they say that IFC is also increasing its local currency lending. And I wrote a piece that we published earlier this week really around some of the challenges around foreign exchange risk and how that's contributing to growing debt burdens in many countries. And so local currency is one solution. It's quite expensive from the bank, is what we've learned, because they hedge it 100%, protect against that currency risk. So that I think there will be some fruitful conversation potentially around that. But IFC has a target that 40% of its lending by 2030 will be local currency. And another one of the big things that he talked about, which Clements sort of hinted at, is a change in the energy policy. And Banga has actually been talking about this or pushing for it since he got his job at the top of the World Bank. And so what that will look like at the bank is they're talking about it as an all-of-the-above energy strategy. This, I think, is very much aligned with things that they're probably hearing from the US government and trying to sort of get ahead of that. But it's also something really important to note that African governments and the recipient countries have been really pushing for, particularly when it comes to more natural gas lending. And so this, there has been, I think, this tension sometimes between the climate agenda and the energy access agenda. And I think that, the World Bank last year launched the M300 initiative to connect 300 million Africans to energy. We will have an update on that next week. But I think this shift in the strategy is really looking at, an all of the above strategy, which will include obviously renewables, but also the World Bank is looking increasingly at hydropower, which is something it had kind of backed away from. But the biggest change will really be about nuclear energy, which is the ban. Bank has had a ban in place on nuclear energy for quite a while. And there has been a big push, including a bill that recently passed out of committee in the US Congress, pushing for the institution to do that. And, I think this is, at least from some of the things we've heard, Banga has spoken to Treasury Secretary Besant about this and that there's sort of U.S. support for this, but we'll see where it goes. It sounds like the energy strategy won't be completely ready for the spring meetings next week, but that he will be taking it to the board in June. So this whole discussion around nuclear energy, I think, is one thing that will be a big topic of conversation, a shift for the bank. How can the bank do it? What have been some of the sort of historical concerns? And I have a piece that also is looking into that a bit more deeply, which will be out next week. So basically, this is a giant promo for, everything that you should be reading next week. But one of the things I did want to also bring up is Banga was asked about the bank's commitment to climate, this 45% of its lending to climate each year. And he said that the bank remains committed to that target. and talked really about how smart development has climate benefits. And so, building a road that's not going to erode in 2 years after the first major flood is a smart investment and a smart development project. And that could be also considered a climate project. So, I think we'll see how that plays out. One of the things I'll note is that we did an event yesterday with Congressman French Hill. He's the chair of the House Financial Services Committee, which has jurisdiction over the MDBs, including the World Bank and also the IMF. And one of the things he said is that the World Bank and MDBs are kind of woefully off course, and that they are way too focused on climate. And he pointed out that if you look at sort of the World Bank annual report, it mentions climate 100 times, but barely mentions things like malaria and HIV/AIDS. And so he said, and I think this is a place you likely will see U.S., is that the bank really needs to get back to basics. It needs to focus on a core mission of poverty alleviation. And I think this job creation agenda probably will speak to this administration's priorities as well in terms of stability and security and things like that, but also around basic needs, right? Healthcare, education, etc. And, French Hill talked about this nuclear energy change. That is something he has pushed for. He co-sponsored that bill. And he said it's something that to him is really important. And he did say, even though these institutions are woefully off course, the U.S. should stay in these institutions and use the U.S. influence to make the changes that they think are necessary at these institutions, and that there is benefit to the U.S. It fits in with an American first foreign policy to stay in these institutions. So, I think you hinted at, what are some of the things the U.S. could ask for? I mean, I think a change to the nuclear energy policy is one. I think you could see some pushback on climate. Lending to China, I think very likely the U.S. is going to say that lending to China should go away entirely. The bank should not be lending money to China. And I think there's a couple other things around U.S. companies in World Bank procurement, or potentially more staff in key roles at the bank and things like that are more on the operations side to have more internal influence. So, but we don't, but the fundamental thing is we don't know if they're going to choose to stay in. So some of this is very speculative. If they do stay in, these are some of the things that I think will be part of the conversation. On IDA, it's unclear. I think Banga said yesterday that if the U.S. Doesn't follow through on its commitment, and if some of the European countries cut their contributions, I think there's active speculation that the UK, given their aid cuts, will likely cut their contribution to IDA, that instead of being sort of $100 billion replenishment, funding will probably be between 80 and 85 billion instead. And, this is funding to the poorest countries, and these countries, partly as a result of US policies, are also facing increasing debt, right? The tariffs, the global uncertainty, there's a flight of capital from some of these markets to safer assets, and then just driving the value of their currencies down, which makes that debt more expensive to pay back. So there's a lot of dynamics. I think I'll also be watching. I don't think we'll see much movement on debt, but I think it's something that we always sort of pay attention to around the meetings. Also, because the G20 meets, they run this common framework. G20 seems pretty hamstrung by the sort of US role right now, but I think there's, I don't think we'll see movement, but there will still be conversations certainly around debt and some of those challenges as well.
That was a big question for me because I didn't actually see a lot around debt on the agenda, and I feel like at this point in time, probably a lot of countries are wishing we should be talking more about it. But Clemens, were you surprised by this shift to fund nuclear energy? And do you think we're going to see a lot more shifts that are sort of in line with the Trump administration's priorities?
That's the million-dollar question. And I think the point that Adva made when she was relaying French Hill's interview yesterday is really very important. This is something that I've been hearing a lot in Republican circles is really a focus on returning not just the World Bank, but also the IMF back to their core missions and mandates, and a real sense that there's been too much mission creep on the part of these institutions. And that is a fundamentally very big shift. I mean, we all have long memories, and you don't need to have a particularly long memory to remember Janet Yellen only a few years ago talking about evolving these institutions to focus on global public goods and climate and pandemic preparedness, and alongside sort of the expansion of their mandates, both the IMF, World Bank, and the multilateral system in general, taking a much more liberal view on their finances and really pushing these institutions to take much more financial risk, to be more efficient with their capital. So really trying, I mean, the real focus that we've been hearing for, the last 3 years coming from major shareholders at all of these institutions has really been bringing them into what, quote unquote, the 21st century. And so I think there's going to be a lot of very stark change in course if the objective now is to really return them back to basics. And even if that is where the US is at, there's not necessarily a consensus around that. And so this is really where there's going to be interesting politics to observe is, there are many European shareholders who have very strong views about the role of these institutions, especially on the climate side. There are a lot of European shareholders who have very strong views against nuclear. There are a lot of shareholders in sub-Saharan Africa who think that the bank has been too orthodox on climate finance and has prevented them from, as Adva said, really pursuing an energy access for all policy that they feel is more aligned with their development agendas. So all of this to say is again, I see a lot of opportunities here for real disunity in the perspectives that the different shareholders are bringing forward at these institutions. And it's really important to remember that even though the United States is the largest shareholder and it has this kind of sort of Damocles in the veto that it has, it can block really major reforms at the institutions. It is still a multilateral system where you need to have a majority consensus in order to really do things. And so if countries aren't agreeing on the fundamental direction of travel of the organization, really have the institutions sort of coming to a policy standstill. And that doesn't mean that they can't continue to operate. They can, but there's not going to be a huge rethinking or re-implementation of their direction of travel. Now, I still think that is better than what's happening to a lot of other organizations. And in a lot of ways, because these organizations are banks, they're demand driven. So the client says, this is what I want to borrow for. And at the end of the day, especially at the World Bank, the IMF is a little bit different, but especially at the multilateral development banks, in a lot of ways, it's the borrowing countries that really do set their own agendas for how they're managing their portfolios. And I think that's a really important thing to remember.
Yeah, I wanted to can I just jump in quickly on one thing? One of the things in the conversations I've been having in the last couple weeks on the bank that's been interesting is this sort of question that's arisen about, like, yes, it's important for the US to stay in, but is that true at all costs? If US leadership in these institutions either takes them back in ways that aren't productive, or they just become quite obstructionist in the internal processes, at some point, is there a question of if that's worth it? And that's one thing that's kind of interesting that I don't think you really hear in the US, but in talking to people abroad, I've heard a little bit, just sort of asking that question, which, just when you were speaking, Clements, that reminded me of some of those conversations. So I think there could be real trade-offs to the US staying in, depending on how they decide to participate and what their role will be. I also think there could be differentiations between the bank and IMF. How the U.S. engages.
Yeah,
But in terms of the trade-offs, I was actually thinking about this when Clements was speaking, speaking in terms of borrowing countries. I assume a lot of them agree with the back to basics agenda.
I mean, that's an interesting question. I mean, I think it really depends on the borrower, right? Different countries want different things from the World Bank. And especially, I mean, you see that as countries, shift from being IDA to IBRD, the borrowing relationship changes. There's obviously a huge demand for infrastructure, and a lot of countries don't want to borrow for the social sectors because they'd rather finance that directly through their own budgets rather than through loans. But I just did want to a little bit respond to some of these points around is the U.S. engagement a good or a bad thing? I mean, I think it's an interesting question, and I've been detecting a lot of what you said, Adva, from some shareholders kind of, I think, a little bit flippantly sort of saying, well, is the price of U.S. participation worth it? And I sort of think, be careful what you wish for. I think there's been a lot of frustration over the years with the US because of this veto. The US has prevented, I think there are a lot of borrowers in particular who would like these institutions to be a lot bigger. And the US is able to block capital increases. And I think that's been a real source of frustration. And the US, executive branch often points to Congress as kind of being the speed bump there. At the same time, I think people shouldn't underestimate how profoundly affected these institutions would be if the United States pulled out. I'm not entirely persuaded that these institutions would be able to remain AAA if the United States pulled out. They've already gotten very expensive. It's very expensive right now to borrow from the IBRD in a high interest rate environment. So if you lost, your AAA, would it even be attractive for anyone to borrow from the IBRD? And then, you don't know who the largest shareholder would become if the US pulled out. China's currently the third largest. There is an opportunity that China could potentially, swoop in, become the largest shareholder. Is that going to be an agenda that's, more inclusive and that, that other countries find to be, a better shepherd of, the World Bank? There's a huge question mark there. So, I think there's, there are real, I think a lot of the people who were kind of in this mode of thinking, the US is acting as a brake and a block to progress, haven't thought through fully the entirety of the consequences of the US disengaging.
Well, thanks so much. But I think after this period in time that we've gone through when we've seen the dismantling of USAID, I think a lot of people will probably be thinking disengagement should be the last tool, and we'll probably want to do anything possible to keep the US in. What's your take on that, Adva?
I think at least what we're seeing from the bank, reading the tea leaves a little bit, we're not seeing a ton publicly, but I think that there is a very strong desire from the part of the bank to continue engaging with the US and to have the US continue to be a member. And I think for a lot of the reasons Clement said, it is a vital part of the institution. It could really shake the foundations of, sort of how the institution operates and the cost of lending and things like that. And its role in IDA is important, right? And so I think, my understanding is, Banga has met with Treasury Secretary Scott Bessent. He's been on Capitol Hill. I think he's trying to make the case. I think you see that. He wrote an opinion piece in the Financial Times that to me seemed kind of targeted at talking about, the bank's agenda in terms of job creation and also the value for money that the US has gotten from its engagement in the bank. Because on, a few $1 billion of paid-in capital, it's been able to leverage that money tremendously and had a lot of impact around the world through the bank. So I think certainly from the bank perspective, there is a strong desire to engage. And I think, to Clemence's point, some of the people who might be grumbling a little bit, I think maybe, you have to look at sort of the totality of the picture. And we don't know how the US will engage. It would matter a lot who the executive director is and what their sort of mandate is, what type of priority their engagement with these institutions will have. But yeah, I think we'll see. I think the U.S. will want to extract some policy changes and differences, and so we'll see how that plays out. But the U.S. has long been very influential at the bank, and that's important to remember. This is not new, right? A big part of the reform agenda that was driven over the last several years came from the U.S. Treasury. Now, obviously, this Treasury in this administration has different policy priorities and positions, but the U.S. has long had this really strong influence, not only by dint of the veto, but also because the bank is based here in DC. It's a proximity thing. You can weigh in more easily. You might know more people in the institution, things like that. So, Clemence, I'd be curious your thoughts, but I do think that overall people very much want the U.S. to stay in.
Yeah, no, I fully agree with that. I think an engaged U.S. that's engaged with the world is clearly, in everyone's interest. And I think that's very much where the conversations are right now.
And you also spoke about a bank sort of highlighting their value for money, that they do provide value for money for the US. And I think a lot of agencies and organizations right now are trying really hard to showcase their value to the US. And I'm not quite sure anyone has gotten it right. Do you think this would be a good time? These meetings are a good time for them to showcase their values, and what does the bank actually need to do to prove that they are a valuable institution?
That for me?
Yeah.
I think it's this week, but I think it's also, we're still not even in the first, Are we in the first 100 days still of this administration? I can't quite remember, but we're still in very early days. So I think this is kind of the early kind of briefing process. And I think this is going to be incredibly important. I mean, Adva mentioned this earlier. The Treasury Department is still very understaffed. You have Scott Bessent, but then after that, you don't have an undersecretary for international affairs. You don't have an assistant secretary who's overseeing the U.S. participation in international financial institutions. And so there are a lot of decision makers that are still missing, which I think is one of the reasons for which, the U.S. has just been abstaining on a lot of the votes at these boards. So this is a very important moment of education. I think there is something that's inherently very appealing about the concept of the United States being an owner and a shareholder in an institution. And I think that resonates quite a lot with certain members within this administration. And I do think there's an incredible amount of value for money and financial firepower that you get out of these institutions that's inherently appealing to someone who thinks along those lines. I mean, the example of the U.S. has put in $3.7 billion into the World Bank. And the World Bank, over the course of its history, has lent almost $1 trillion, is an incredible leverage ratio, right? So I think all of those things are just incredibly important to continue to highlight.
And earlier we spoke about the agenda, which seems quite right. I also had a peruse through it and it seems quite right. But Adva, are there any important events that people should go to who are in DC, or any important key moments that we should be on the lookout for?
Yeah, I mean, I think that one of the things I'm going to go to is they're having a flagship event on jobs. And I think that will probably tell us a little bit more about sort of how they're approaching this jobs agenda. You'll notice sort of across this schedule, a ton of events tied to jobs. So that's definitely something that I'm sort of keeping my eye on. What does it actually mean for the bank to reorient around jobs? What are they saying about it publicly, et cetera? So that's one of the things. I mean, one of the things we always also keep an eye out for is, they've made last year at the spring meetings some big announcements and commitments. One was around M300, this energy, connecting 300 million Africans to energy. They also made a big commitment on access to healthcare. So kind of looking at some of these commitments and where progress has been made. Though maybe I'll let Clemence weigh in too, because I know that the Center for Global Development is hosting a bunch of events next week, some of which people probably want to tune into as well.
Yeah, I also took a look at your agenda, and quite interesting, Clemence. What should we be on the lookout for?
Yeah, I mean, just on the official side, before I plug the CGD events, but on the official side, I would definitely also be looking at the DC meeting, development committee meeting, where all the finance ministers sit down together. Historically, how it's worked, and obviously we're not in a past this precedent moment, but historically how it's worked is every country puts out a statement. So, I will be reading the U.S. statement with a lot of interest, as I will be reading the statements of China and a lot of the big shareholders, and also the statements of the African countries and other borrowers and some of the emerging markets. I mean, I think it's just going to be really interesting to see how the different countries are in governments or interpreting the moment and what's the vision that they're putting forward. In terms of CGD, yes, please do come. We have many different events kind of spanning a lot of these issues that we've talked about. We're hosting an event on the future of multilateral concessional financing funds. In this day and age, it's just getting harder and harder for not just the IDAs, but the global funds and the Gavis of the world to get the money that they need from their donors. And we're hosting an event particularly focused on the U.S. bilateral side and, what has happened, kind of a little bit of a review of what's happened over the past couple of months, but also, vision for what needs to be done going forward. Ditto, we're hosting a couple of different meetings on the European bilateral front, looking at how the Europeans are approaching the current aid environment. We're also hosting a panel focused on a couple of countries in sub-Saharan Africa and how they're dealing with not just the bilateral aid cuts, but the ongoing and looming trade war, and just generally being in a higher interest rate environment and what that means for their economies. So it's a pretty big span of events. So please tune in. We're hosting them in person and online.
I would definitely We'll definitely be tuning into some of those here at Devex. And as mentioned earlier, Advar and Jesse will be on the ground, and Alyssa will also be at the Gig Summit this week. So lots to look forward to. But thank you guys so much for joining me. And I think we're going to have 2 special newsletters on the spring meetings. Am I correct, Advar?
That's right.
So definitely more to look out for, and we'll probably have a good summary of what's been going on next week. And next week as well, we'll have Jesse and Advar here to update us on the meetings. Thank you, everyone.